Congratulations on your accepted offer. Now that you've successfully entered escrow, the next couple of weeks will be inundated with a lot of documentation that you're going to have to review. First and foremost will be these initial disclosures. And I know that they're the most confusing part of the whole entire process because everything else is quite transparent, but these initial disclosures are very, very challenging to understand. They changed the law, and starting in January 2010, these new disclosures are now being sent out. And so I wanted to take a few minutes to go through it with you in person so that you can understand a little bit better what you are signing and looking at. First of which is just your initial cover page. It just explains to you that you can send these back either to the compliance department, either fax them back or mail them back. The preferred process, of course, is if you can email them back or fax them back to us. You're welcome to send it back to myself, Sean, or Amy, and we'll expedite getting it in the hands of the right people. This here, box number 1, it will generally say if your rate is locked, what the rate is good for. If it's not locked, it'll just state that it's only good till today, because rates change every single day, and depending upon whether you're floating your loan right now or have locked your loan, that's what will be in this box. And then the estimate for all other settlement charges is available through, and then whenever your close of escrow date is what's going to be in here. And then after your lock, your interest rate, you must go to within X number of days to receive the locked interest rate. It's just letting you know that everything has a time associated with it. And then it'll say if it's not locked that you must lock it at least 5 days before your close of escrow date, because you kind of have to get that done. Initial loan amount for this example, I put $700,000 for a 30-year fix at 5%. Mortgage payment, and we pretty much on a fixed 30-year, all the answers are going to be no. If your rate can rise, whether your payments can, with your balance can go up, etc. So that's pretty much what that section means. The box A, which is your origination charges, $12.95. This is for your credit report, underwriting fee, processing fee, tax service, flood certification, loan documents, etc. It's all the lender fees lumped into box number A, and it adds up to $1,295. Box B is covering for all the charges that are a part of the transaction and loan, not particularly out of your pocket, but box B just tells you all other settlement charges that are associated with purchasing this property. Again, not all of them being out of your pocket. So here's box A, it's $12.95. If you're paying points, it'll also be $12.95 plus whatever points that you're paying will go into box number A. And then number 3 is your appraisal charges, etc. This is a part where it does get more confusing. Owner's title insurance. This is what the seller pays when in a normal purchase transaction. We have to disclose to you as the buyer what the owner's title insurance is going to be. However, it is not a cost that you are incurring, it's a cost that the seller is incurring. But again, with these new disclosures, we have to disclose to you what they're paying, and they show up here on your initial disclosures. This is not a closing cost estimate, this is just your initial disclosures. And then pest inspection is also another thing that the seller pays, not you as a buyer, but we do have to disclose what that pest inspection figure is and put it on here as well. The other item that's on here that is, again, not a cost to you 99% of the time is a transfer taxes, since on a normal sale the seller does pay for the transfer taxes, and on this example it's $900. However, it's not your cost. We have to disclose it to you though. Daily interest charges, this figure will be whatever date from the funding of your loan till the end of the month will be. Since mortgage interest is calculated in arrears, meaning time has to pass in order for interest to be charged, this will be the number of days from whatever your funding of your loan will be till the end of the month, and then your mortgage payment, your first mortgage payment, will not be due till a full month has passed from the end of your current month. So for instance, if you're closing on May 20th, you will have 11 days of interest, and your first mortgage payment will not be due till July 1st, because June has to pass in order for July 1st payment to cover that interest. Line 11 is another area that confuses most people. The hazard insurance figure that you see here of $2,400, again, is just for example purposes. You will see an example amount on your initial disclosures. At this early stage of the escrow process, you haven't had a chance to shop for your insurance premium that's required on your home before you fund. You will be doing that. However, for our initial disclosures, we're getting out to you what our calculated insurance figure is. What you shop for is what will replace what's on these initial disclosures. But for our example, it shows as $2,400. You do have to pay for your insurance 1 year in advance. And so they have a full years of insurance coverage on the estimate. So B is for all other settlement charges. And again, this is inaccurate. It's not your charges for all other settlement services. It's all other settlement services, period, not just yours. So that's the confusing part of these initial disclosures. I wish we can work on ways to change it, but that's the way they come out. And I know this is the area that you will get stuck on, because every person who goes through a purchase process has gotten stuck on this since we've been sending out these disclosures in January of last year. So moving on, the next one is your Truth in Lending Disclosure Statement. This is another form that is 100% of the time a question is asked, why is the annual percentage rate different from my interest rate? Well, pretty much your mortgage rate, the rate that you lock in, will be, let's say for example in this instance, 5%. But all of the other costs and charges associated will be turned into a percentage, and then your APR should be higher. I obviously am missing some things, but your APR is generally higher on your disclosures than what your note rate is. And it's taking all the closing costs and converting it into a percentage and then adding it back into your loan. So the other question I get is a finance charge. This is what's going to cost you over the life of the 30 years. But if you sold your home, or if you refinanced, obviously you won't be charged this amount. This is just letting you know what the cost of this interest to you is over the life of the loan. But if you obviously close the loan, you only get charged on interest on the time and the balance that has passed. And so that's for all future notifications, just so you knew how that worked. And then the next couple pages you're going to see is these are the itemization of amount financed. This is a breakout of everything you saw on the initial closing cost statement, again, which is inaccurate because the owner's title insurance, pest inspection, and the county transfer taxes stamps are not your fees. This is the seller fees. But these figures will change. Again, the initial disclosures just come out that way. Definitely letting you know what the truth in lending terms are, like the APR and prepaid finance charges, all the things that was on the previous disclosure. And then the next few are just your authorizations. This is authorizing us to verify your employment, bank accounts, etc. to qualify for the loan. This is letting you know what your FICO scores were, and on here we'll have your actual FICO scores for the 3 bureaus that we pull your credit report from. Page 2 of the credit score disclosure. Equal credit disclosure, pretty self-explanatory. Just what does your privacy pages, what does Mortgage Capital Partners do with your information, and pretty much disclosing to you we do not share any of your information with anybody. And then right to receive a copy of the appraisal report, letting you know that you have a right to receive a copy of it. This is the domestic partnership addendum to the loan application. If you're married, you're going to circle no and then sign this. If you are in a domestic partnership, of course, you're going to circle yes. And every person has to do that. Servicing disclosures, letting you know that we do not service your loan, meaning your mortgage payment will not be coming to us once you close. We will be shipping the servicing to a bank that's going to do it, such as SunTrust or Chase or Franklin American, Wells Fargo, etc. Request for tax transcript. This is just to verify that the income taxes you've turned into us are the same as what the IRS has. And so so long as you're not turning in fraudulent tax returns to qualify, there shouldn't be any issues with signing this requested tax transcript forms. We will fill in the years that we need it for, since the compliance department and the quality control department will check off the years that they need to verify of your tax returns. And then, of course, another standard housing and urban development disclosure, which is the financial fair lending notice. And then authorization to credit card. This is for ordering your appraisal. We cannot order your appraisal until this comes. We can only take Visa or MasterCard. And this $550 is an approximate appraisal estimation. We'll get you a more accurate appraisal estimation once they put the request into the appraiser, get a quote based upon your purchase price, where your property is located, the size of your home, etc. And then the appraisal costs will come back. We'll let you know what that fee is. Then you'll give us the okay to charge your credit card that right figure. But in the interim, we have to input all of this into the system before we can get to that stage. And then the last one is the appraisal acknowledgement, letting you know how you want. You can let us know how you want it. Most people check off that I would like to receive a copy of my appraisal report and deliver it via email. And that's the way that 99% of people that we've helped wanted it. They wanted a review, a copy of the appraisal, and via email. So those are the initial disclosures. Hopefully I didn't make your eyes cross, and hopefully I didn't go too fast. However, if I did, please feel free to give me a call or email us the questions that you may have that I didn't cover on this initial video. Hopefully this helps you before you open this attachment, that we went through it briefly here, and looking forward to helping you get the keys to your new home in as stress-free as we can. Thank you so much, and looking forward to talking with you soon. Bye now.